Today on Traders Workshop, we're going to talk about SPX option straddle swaps with Mark and Jason. So stay tuned for the brew. Oh, hi. Good morning, gents. How are you?
Hello.
Yeah.
What's going on, Lex?
Not much. If I freeze, do a thumbs up or something because I want to see those lightning bolts go up. I just realized Reuven just told me that if I do a hand signal, there's a little emoji that pops up automatically in an Apple. Really weird.
You fancy Mac users.
Yeah, I know, right? Good morning. So yeah, we're going to talk about option straddle swaps. At least we're going to start there. So Mark, I'm handing the mic to you. First of all, explain what it is. Okay, and I think you referred to SPX and you've done it on some earnings plays as well. So let's get the nuts and bolts here and why we want to do these things.
Well, first of all, if the name isn't enough to attract you to them, like anytime you get to say swap in volatility terms, it just sounds fancier and more esteemed. So I think that's really reason number one to be trading straddle swaps.
It sounds sophisticated. I will admit that. Like
it does. It's a 301 level strategy.
Okay, I even like it more now. Cool. I feel like I'm in the Goldman trading room in New York right now.
This is right from the inside, from the heart of the octopus's belly.
All right.
Or squid. It's the vampire squid's belly, not the octopus.
Right. I'm gonna get prepared with the remarkable just in case. You never know what could happen here.
All right. Well, I mean, this is a lot of setup for a trade that's really just as simple as buying one straddle and selling the other. That's all a straddle.
That's all it is. Are you kidding me?
So we had all that run up, and it's just buying just short one straddle and long the other.
Okay, we got to get more in depth than that. So, why would you ever do that?
Well, so to be more precise, short a straddle in 1 month versus long a straddle in the other month. Usually the same strike. It's also conceptually the same as being long a call time spread and long a put time spread at the same strike. So it's two straddles or two time spreads. You can think about it, you're construct it both ways.
Okay. So, and as the name implies, the straddle part of it, can it be a strangle swap?
Oh, absolutely. You could imagine a condor swap.
Oh, geez. Now you're getting really fancy. All right. So,
It seems like a lot of legs to trade though for that strategy.
It does, right? You can't do all that in one, right? So do you have now you have an example of what you did?
Well, generally what you're playing with is the difference, I guess, in like forward variance in some ways, right? That you're betting that the difference in the distribution of variance between two different or volatility between two different time frames. That
sorry.
Yeah, you want to be long the month that you think is going to move more and short the one that you think is going to move less. So like if you think, if you have a 1 day and a 2 day, do you think more of the movement is going to be in days 0 to 1 or more of the movement is going to be between days 1 and 2? And you'd get long or short that depending on when you think the 2 days of variance is getting priced and how the 1 day, represents, or what portion of that the 1 day represents.
So it sounds like this is a really solid earnings play just by the nature of earnings. Implied volatility is always jacked in the the earnings month, right? Or weekly, whatever. And then subsequent months going down are just they're not mashed, but they're nowhere nearly so high as the earnings month. So that seems like a good play there. Is that somewhat accurate?
Yeah, like it works well in an earnings trade if you want to short the front month premium and let that collapse. You're protected. I think that's the main advantage of it, is that it's like a short term. Like if you sell the front month, you get to capture that decay, that vol crush, and be protected by being long the back month. Sometimes the back month also comes in a little bit, right? If you're doing the weekly versus the second week, or a week versus a month, you are going to get some crush in the back month, but you're expecting the front month to go down more.
Right.
But of
Right.
course, you're short gamma. So you're trying to capture that, short-term higher volatility, higher relative prices versus the gamma movement risk of it actually, going beyond that straddle, that front month straddle in the front month.
Okay.
I got a question. Where's an emoji? Where's my emoji?
You got to do a thumbs up or something like that. Nothing happened. I don't get it. Anyway, go ahead.
Okay. So, Mark, what's the advantage of doing a straddle swap versus just a calendar trade? What's the advantage of splitting between calls and puts when you could just do a call calendar?
Or a put calendar, right? For that matter. One or
Exactly.
the other.
It's well, of course, it'll be twice the size if you do the straddle swap. So in some ways, like if I reverse the question and say, if you don't want to do the straddle swap, you can do the same trade or a similar trade with half the capital by doing a time spread. But I think there's a little more delta to either a call or a put calendar than there would be with the straddle swap. Oh, there is some delta to the straddle swap too.
Yeah, well,
depending on where it moves.
Probably not a ton, though, right?
Delta.
What did you say, Jason? Sorry.
No, what do you mean by added delta? I mean, if I'm doing it at the money, I mean, it looks the same to me.
Right. That's what I was going to say. I think, did Mark freeze?
I think Lex is freezing.
I think Lex froze too. That's weird.
Wait, I just said, did Mark freeze? And you guys said I froze.
Yeah, you did.
Huh. Okay. I don't know why I'm having trouble with the World Wide Web.
And your resolution is pretty bad too, which is better for everybody looking at your face.
That was a cut. Was that a cut? I think that was a cut.
It was a burn.
So the question was deltas, right? With the straddles, they're all about 50 deltas, so we don't have any residual deltas really, right, Mark?
If you move, once it moves, you have a delta, but yeah, when you set it up, there's no delta to either of these trades.
Okay, good. So we want a big difference in IV from month 0 to month 1 to beyond, whatever one we're going to choose. So we need a pretty huge difference in IV to put this trade on. Is that safe to say?
Yeah, although I actually think, from an earnings perspective, that's where, often it makes sense. Although this earnings season, incidentally, I think we've seen things move beyond the straddle more often than some of the previous ones. So like this trade specifically in this recent earnings season has been less of a hit and potentially somewhat of a miss even. Right. I think we've, especially on the upside, a lot more greater than straddle moves in earnings stocks. But even if there's not a crazy IV difference, I think it's an interesting 0 DTE trade or 0-1 DTE trade. To have like the ultra short-term straddle swap. If the market's not moving any, you're paying $8-9 for the SPX straddle swap that you can probably, make a 50% profit on in the day in some of these 0-day moves.
Right. So I guess my obvious question, I don't know how obvious it is, but you need to, you need to have limited movement on this thing, right? On the straddle side of it. You don't want giant movie, although you have one long straddle that has less positive gamma than the short one has.
Yeah, you don't want movement.
Gamma. So we don't want movement.
No, okay. You don't want movement.
So that begs the question. Here's what I like. Maybe I like this a little better. I don't know why. I think I do though. I love my directional diagonals or calendars, like Jason alluded to earlier, right? Because again, unfortunately with those, you got to pick the direction. But does it make sense to do a double diagonal or a double calendar? You got a downside one with the puts, you got an upside one with the calls. Now you can kind of go each way, right? And so you kind of want a little movement to one of the two strikes.
Yeah, plus there's liquidity. There's more liquidity in out of the money options too.
Well, so you're kind of talking like a strangle swap then, right? If you're long putting a call.
Yeah, so that's right. It's a strangle swap, right? So what have you ever done those, Mark?
Yes, not necessarily recently. I mean, like you say, you've got a little more delta on them. You're going to have a lower capital outlay on that, but if it moves, like you've got some gamma.
Yeah. Okay. Yeah. So one of the ones that Jason the guy with the cool background up there told me. Now, he didn't suggest that I trade this. He said, this is what I'm doing. So I decided to do it myself on my, own ability. And I did an upside calendar, I think it was. It might have been a calendar, might have been a diagonal. I can't remember.
Diagonal.
Okay, it was a little diagonal. So I sold a closer strike in the near term and bought a higher strike in the next term. And it was a 0 DT and a 1 day plus 1 DT or whatever. So it was only 1 day apart. The critical thing, the reason I did so well on it was we got the direction correct. The SPX moved its way. It didn't go all the way up there, but it moved its way in that direction. In my rule of thumb on these kind of trades, there's a max profit and there's a max loss. I like to take 50% of my max profit on these kind of things. That's just my benchmark. That's where I'm taking this stuff off. So Jason was right. I had the spread on. It moved toward, the correct direction.
Not too much.
Not too much either. Literally, this trade. I don't remember the exact prices, but I'm gonna just make them up. Let's say I did this for $3.
46.20.
Yeah, I'd say I did this for $3. It was $4.50 before I could blink. $4.50 before I could blink. I couldn't hit the close button fast enough on this thing. So they are powerful when you get two things working there. Obviously, the direction is a massive one, right? Which I'm the worst at in terms of direction. I ask Jason every morning, which way are we going today? And then the other good thing is I think we had a disparate implied volatility curve. We had higher implied vol in the 0, and we had maybe there's an announcement coming out. I forget. Maybe Paul was speaking, and we had lower implied vol in the other one. One of the things that I would say is that there is a little bit of a fuzzy factor when you go from Friday to Monday in the 0 DTE calendar and diagonal spreads, or straddle swaps for that matter, because it looks like Monday vol is way, way cheaper, but I think they're computing in the weekend somehow. The market making community computes in the weekend. So it looks like there's a big disparate vol, but maybe there really isn't as much. Comments. Jason, you want to say something?
Yeah, sure. You are referring to time-weighted theta. So, there's certain times in the day in which the market is less volatile. That is when it's not open. But the calculation of time in theta and in model calculations tend to be in calendar days. So what you're seeing is the weighting of implied volatility on that because of that time difference. So Friday, usually you see like VIX go down more than you normally would. And then Monday you see VIX go up. It's not really actionable. It's actually VIX is responding to what should be happening.
Okay, that makes sense. As we're chatting here, I'm looking up like this. I'm throwing orders out right now.
We can hear.
I know.
Yeah, I know what happened.
The dings are going out. The market.
Look at the market.
Yeah. I thought we had a little mild sell off in the Nasdaq, and then all of a sudden I thought, I looked up and I got filled. I'm like, okay, we must rally it again. Sure enough, here we are. So, a little short right now, boys. So anyway, okay. Good points. All good points.
Our standard rule of thumb for that was that like the market's open 6 hours and closed 18 hours. You almost want the reverse, right? That you want like 2/3 or 3/4 of the variance to occur in those 6 hours, and the off hours to be the inverse of a quarter or whatever of it.
Gotcha.
Well, I think it changes with overnight moves. Like when you see a lot of overnight moves, then the weighting changes quite a bit sometimes.
Yeah.
But
fair enough.
But yeah, I mean the points that I would make about the straddle swap, the first one is it's very close to the return profile of just a straight calendar, straight put or call calendar. Mm-hmm. So I tend to simplify it. So I rarely do these things. Lex is either making money or losing money over there.
I've weaned
your
into
missing
my
point
second version.
He's biting his pen. Biting the back of the pen. It's not a good sign.
Daddy needs a new pair of shoes. Here we go.
Lex just did a YOLO put.
I did a YOLO put. Yeah.
But
I need a little. Let's just say I need a little bit of a sell-off. That's all. Anyway.
But
Go ahead, Jason. Sorry.
yeah, I mean that's I mean, and then to kind of expound on what you were talking about, Lex, when I made that plan, the 4610 short, 4620 1 to or 0 to 1 DTE.
Yep.
Although it was technically 3 DTE because it was a Friday to Monday. When I said this is what I was going to do, it's because there was so much there was so much like one-sided volume right there in that like 4600 area.
Yep.
That I was pretty confident that the risk I was willing to accept was above that 46 15 4620 area. So after Powell was done speaking.
Mhm.
But I kind of figured it would go up unless Powell like really spiked the punch bowl and declared 100 bip
Right.
price
So
or interest rate rise or something like that.
Yep.
So, and if that would have happened, we would have lost very little. It would have
Sure.
it would have gone down and lost just your $3.
Right.
But that like spread there was I mean that's what I was more or less looking for.
Mhm.
And it it just happened to work out that way.
Yeah.
I actually did something different than you because like you, I like to collect my profits, but I like toward the end of the day I bought back that 4610
Mhm.
and sold a 4630 on Monday, and it was like a free vertical, even though it didn't work out, but it was like a free vertical
Right.
that day.
Yeah. So that was my issue too. I needed to do something with the short rolling off. I had to do something with the long. I just chose to close the whole thing. I didn't move it into a new spread. Okay. So shifting gears a little bit, do you have Volland handy? I just want to ask you a couple things on what we're seeing with Charm for the 0 DT. Yesterday I thought I saw Charm as a short day, and that the dealers were going to be short and they would have to buy things in because they were of their shortness, and yet the market just got hammered. So, that was
it
my
depends on
question
what
for
time you looked at Volland yesterday, because the Charm was the Charm was very bullish pre-market, and as soon as the market opened, a lot of that bullish Charm kind of flipped sign. So it looked, it was very quick to kind of hit that upside target. But then, as like the day went on, those calls started getting bought heavily, and it was a very bearish outlook.
Okay.
I was expecting it to kind of stay between 45.65 and 45.75, and I started saying that around 10:30.
Mm-hmm.
It wasn't until later in the day when I said, this could extend down to 45.52, but I still expected that range.
Okay.
And then we extended down to 45.50, and I'm like, oh well.
Yeah. Okay. Let's have a look at you shared your screen. Let's have a look at this real quick.
Yeah.
Okay. So hey, can you make the at the money line like more prominent? Is there any way to do that? Look at me complaining. I'm like I got a guest fee here.
How's that?
Complaining. Where is it?
Right here.
Hang on. Let me make it bigger. Okay. I was hoping for a darker or a brighter line that I could find. I'm always looking for that at the money.
Yeah, it's right here.
I got you. Okay, so this is the JEX paradigm, is it not? Or am I?
That's correct. Yes, it is.
So is this telling me that the dealers on both sides they're getting shorter as time goes on? Is that correct or not correct?
So dealers are getting short puts and long calls.
Correct, but as the day goes on and Charm does its thing, sitting right here, if they're long calls, they're getting less. They're going to have fewer deltas, they're getting shorter, and if they have short puts, they're getting shorter. So they would technically
they're getting longer. Yeah, they're getting shorter in deltas, so they're going to have to buy in order to
which
hedge.
Seems like it would have a bullish flavor.
Yes.
Okay.
That's not good for your puts.
Not good for my puts. Okay. So yesterday this looked exactly the same, and yet we sold off. So that's why I was curious.
Well, it only looked exactly the same, like at 9 o'clock in the morning, 9:30 in the morning.
Yeah.
And then actually, let's take a look. What's that commercial where they're like, let's take a look at the videotape, right?
Yeah, that's right. The progressive, throw the replay flag.
Yeah. So when you started looking at 9:30, looked very Jexy, right?
Yes.
Okay, let's go. All right. Looked very Jexy at 9:30.
Yeah.
But as you went along,
Oh,
Still Jexy, but not quite as much. Now you see we flipped that charm right there.
yeah, I got you. Okay.
What time is this? Was that second snapshot?
10 o'clock.
Yeah,
And now this is not as Jexy as it was before, right?
right.
I mean, it's gotten a little bit too much. And then by the time we hit like 11:30,
Mm-hmm.
gotta select the expiration again. Every time you have to. This is a lot less Jexy, huh?
Oh yeah, for sure. So now
So
all of a
this
sudden
is
that feels like shortness.
well,
They're
it's more short, and it's
long
kind of like that.
longness. Sorry, they're gonna sell stuff.
Yeah, they're gonna start selling. So it
Mm.
was that Bank of America paradigm it became, and that's why I was saying it will probably stay in this range a little bit. But then as the day went on, say like 3 o'clock.
I don't
Reselect the
on my
expiration.
version though. What I'm using, I don't have the ability to change the times, right?
No, you do.
Oh.
Everybody has the ability to change time.
Okay.
So this is the longest strike right here at 45.50, and that's
Mhm.
why I said, oh, maybe we could extend down to 45.50. You know, at worst. I didn't think we were gonna, necessarily move down there, but
Right.
but yeah, I mean, the market moved. Somebody sold, and dealer said, yeah, no, we're going to stop it here at 45.50. Thank you very much.
Yeah.
But yeah, by the end of the day, though, we were not very Jexy. It was a different outlook.
What is that one called? The red on the bottom, the green on the top.
This is the Bank of America paradigm. It means dealers are long both calls and puts on either side of the price.
Okay.
So dealers are net long premium. So really, like the way we defined is define like the boundaries of where dealers want to stay. I mean, you could just say it's the longest strike here, but really it's where the dealers are net zero premiums because they're gaining premium in between these strikes.
Mm-hmm.
So they're making like a little extra, I guess.
Right. Okay.
But yeah.
Cool. All right. Good enough. Good enough. Any
So
comments?
yeah. So now if we're looking live, the one thing I would state though when we're looking live at Charm today, is, and we can look at Trade Alert or whatever, is volumes are a little bit lower. Are volumes lower from where you're sitting, Lex? Or I guess at least imbalance is a little lower.
Are you talking about today or overall from the past few days?
Today, just today's.
Oh, I haven't even looked today yet. So I've been doing I haven't even looked.
But I mean that basically by 10:30, normally you would start seeing like these bars reaching 1 to 200,000.
Yep.
Or 1 to 200 million.
Right.
We're not there, so I don't know where. So I don't. This can change, in other words, but it's still looking kind of bullish. I'd say maybe around here to the 45.85, 45.90 area. We can
45.9. Oh, we can get up that high.
We could probably get up to 45 because this will go down to. This will become red. But if it stays like this, and that's like the real key. If it stays like this, 45.85 could be the target.
Okay. So you know what I'm thinking all of a sudden?
What?
Oh yeah, you got it. 45.85. I'm getting my little time spread mechanism.
That's basically at the money right now. So if
really?
If we're gonna stay here, then put on a straddle swap.
Oh, he likes the straddle swap all of a sudden.
I didn't realize we just rallied that much.
Oh yeah, absolutely.
Yeah, it's just been a steady rally all morning.
Oh,
yeah.
I have not paid any attention. You see, whenever I do my updates on the Discord, like my 0 DTE updates, you guys signed up for the text alerts, right?
I don't
Lex,
think
you should sign up for the text alerts.
Okay. I how do I do that?
Oh, we'll get you into Discord, and then you just sign up on my Discord.
I'm not going into Discord. It's another password I don't need to remember.
Okay, that's why you just get the browser to remember it for you.
Yeah, no, I don't want to do that. Just send me
text.
All right,
never mind.
Just send me text.
Actually, maybe I'll see if I can manually put you in. But yeah, so 45.85 was the target. If we hit it, then it'll we'll probably stick around here in this area for a little bit.
Yeah.
But I'd want to see what the next steps are from option option people because up here you can see there's not much. Let's see what the delta looks like.
Yeah.
See how much you see. They haven't really done much up here yet.
Right.
So we'd have to see what they're going to do.
You're thinking we're hanging, here to 45.85, kind of in that zone for now.
Yeah.
Until new parameters appear.
Yes.
I want us to go down to 45.70. Just saying.
You want to go down to 45.70? Well, I think it's going to be hard to get past 45.55, but if you want to get down to here,
yeah,
we're gonna need to see some people buying some calls up here. It doesn't look good for you.
So you're saying I'm not good.
You're not positioned very well for what Volland is saying. Although that being said, now that I see the market, the move is kind of over, so you might want to
jump in.
Downside. Uh-oh.
Someone got filled.
I'm putting dings out there, baby. I'm throwing trades out.
Well, I'm going to log into my trade hawk and put on a Straddle swap now, I think. Not
I mean, let me just put it this way. I'm a little bit short right now. It's one of those things where I don't want to click on the portfolio button. I don't want to see how badly I'm doing right now. Oh my God.
I laugh because it's true. We all three of us have been there where you don't even want to click on you don't want to click on Trade Hawk. It's like the refresh button. You're like, no, don't show me the equity returns.
Yeah, I know. All right, lads, we got to run. Good talk. Option straddle swaps, vol-in, combinations of all the above are very helpful. I'm going to master direction one of these times. I am so bad at direction.
When you do that, call me from the beach.
I'm going to call, because you know what? I'll be, instead of like small trades, I'm going to be doing 1,000 lots. Those add up quickly.
Your size is not my size.
That's right. So, all right, guys, have a good rest of the week. What else? Lots of wine this weekend for Mark's sake. Big dinner parties. Love that stuff. So, and they're all wine.
We had a holiday party yesterday.
You did?
That's why I logged in so late.
Did you, Mark? Did you get your invite in the mail or the email? Mine must have gone to spam. My invite to the holiday party.
Thanks, I got mine by carrier pigeon.
Right.
It didn't make it all the way to Chicago?
No, apparently not. All right. You guys have a good
You guys got a different email. You guys got a different email to pay attention to.
I got you.
Oh, that's right. I got can I do a plug?
Go do a plug.
Oh, okay. So at DAM, we've done a lot of studies on vol and data, and we are releasing our white paper on December 19th at a charity event called Breaking Ground. Come to our Discord or our Twitter for more details. Maybe Lex will be nice enough to put it in the YouTube description.
I will do that. Note to Ruben and Max.
Yeah.
Send us an email with what you want in there, and we'll put it in.
The link is in your email. So.
Oh, okay. Sounds good. Sounds good. All right. Sounds good. Hold on a second. Before you go, listen to this.
I guess the market rallied, huh?
Yeah, I'm doing another one.
No. Are you getting shorter, or are you doing
Lex, losers average losers.
Don't worry about it. I'll let you know about it in the morning.
45.70, huh?
That's right. All right, guys.
I'll cheerlead for you. Volin doesn't
help. Have a great rest of the week, and we'll see you next week on the Traders Workshop. Have a good one, boys.
All right, trading.